If we can see the VIX cool down, VIX is starting to get itself inside the Bollinger, which is bullish, but we would like to crack the 24. And then if we can trade somewhere where it normally traded in the sub 20, this would be a very good time that knowing that the market is turning around. And let's see. So some key observations that we see is the SPY and QQQ, they both have daily squeeze yellow. And let me take a peek at SPY real fast to show you guys SPY. Okay, SPY daily looks like we have 3 yellow histograms. That's good. On the QQQ, we have 2 yellow histograms. That's good. Um, for the weekly, it's still red. We're awaiting the yellow. Switch this to weekly. Still red. We want to see some yellow, which indicates accumulation phase. Still red. We're waiting for that to turn yellow for us to turn for the market to turn around. Another key observation, there's several stocks that are either under or near the 200 SMA. SPY, QQQ, IWM, BTC. These are all trading
And these
near
are
the
all daily 200.
200 daily simple moving average.
Yeah. Mm.
It's kind of known as a kind of a cheat when stuff's on discount. It's usually trading around the 200. So if it's trading at the 200 just because it's on discount, it's not necessarily like, hey, just go ahead and blindly buy it. If we can combine some bullish long-term signals with stocks that are strong and that you have high conviction on, if you can align it with them being near the 200, that's usually a pretty good entry. And of course, you have to set a stop loss. You can't just run it all the way down to, minus or you see your option running down to minus 60, unless it's like a super long-term play like a leap, then those kind of, numbers are normal. But I think in most cases, most traders, we want to see it turn positive, at least within a week before we know that, hey, this trade might not be working out. Um, Amazon, Microsoft, Netflix, MasterCard, Meta, those are all near the 200 SMA. Stocks that are holding the 50 SMA, which is more on the bullish side. So these are stocks where they are holding the 50-day SMA, which is much higher
Hey,
than the 200. And that's Lockheed,
chiaro che campanare, sì, sì.
RTX, Intel, sorry, Raytheon, Western Digital, and SanDisk. And so let me find some examples here. WDC. So yeah, WCDC is looking still pretty bullish. We still need chip memory for AI. Intel. We still need chips for AI. We still need Lockheed Martin looks like still holding the SMA. See how far it is from the 200 and RTX. So these are names that are currently have maintaining a stronger sentiment than our current indexes. And then Bollinger Bands. Let's see. Do you want to talk on this slide, Anand?
Sure. Okay. So Bollinger Bands, okay, are basically a measure of the, standard deviation, of the prices, right? So basically, we have prices can be where they are and then kind of plus or minus a certain amount, right? And the Bollinger Bands basically, the default on the Bollinger Bands is 20 period. So the 20 period average plus or minus a standard deviation, right? So on any given day, right, the price can be where it is plus or minus that standard deviation, right? And the standard deviation, if it breaks past that standard deviation, you know that something is up, right? Like either to the upside or the downside, right? And you can see in this picture here, right, the Bollinger Bands can be actually close together or they can be pretty far apart, right? And a lot of the times, when it's trending pretty strongly, right, the Bollinger Bands can be far apart, and like either the upper Bollinger or the lower Bollinger can be ridden to the you know when that trend is actually happening, and when it's close together, right, it can be trading in a channel, right? Now, what we also want to see is, if you look at the squeeze, right? When those Bollinger Bands are, very close together, right, the squeeze turns on, indicating that the volatility is very low and that, everything is kind of tightening, like we're getting tight price action, right? And you can see this either on the daily or on the weekly, right? And a lot of the times that is the time to start getting alert, right? And you can either buy a breakout or a breakdown from that, sideways action. So, that's what, in a nutshell, Bollinger Bands basically tells you kind of the range in which the stock prices are moving
You're weak.
and where, and when it breaks out, right, how that range will expand. So, Bollinger Bands coming together means low volatility, and Bollinger Bands, going apart means higher volatility, right? And again, either to the downside or the upside. So, yep, go ahead, Henry. What were you going to say?
All right. Okay.
Um,
Yeah, so Bollinger Bands. What my favorite part of the Bollinger Bands is when they reach the extreme levels, when they tend to start to poke out of their normal deviation. That could be a buying point. If you can align it with the squeeze, like this kind of yellow daily histogram squeeze, if you compare those together, that could be pretty good entries. Let's see, this one here, it went on the outside, but you didn't get yellow till the next day. Yeah, those you can take those. Like this looks like kind of a relatively safe trade. This 168 to
Now,
178.
one thing you want to do with individual stocks is also find out, if possible, why they are, breaking out of a sideways motion, right? The the thing is with individual stocks, you never know whether they're going to go down or up. With the market, it's fairly easy to tell, like, okay, if it's going up, all of these stocks are going to go up, and if that squeezes yellow on the weekly, you can, um, you can almost say with certainty that it's going to pull up, right? However, with individual stocks, right, it's based a lot on news. So if you do see that sideways motion and a breakout, right, you may want to go to like the headline news, right? Go to the Yahoo Finance and check the headline news and see what's going on and why the thing is in demand. Because see, a lot of these, right, like this RTX Corporation and the WDC and Lockheed Martin, companies like that, right? Or you know, uh, they are kind of like either defense contractors or you know, I guess adjacent to defense contractors, so to speak, right? They either are the contractors themselves or they make and sell to the contractors, right? So threat of war, right, could be causing some of these companies to go up, right? So you want to also check that before you buy, because if it breaks out and hey, there is a war, there is a threat of war, all right, maybe you get it, right, and then set a target to exit, right? So just a word of advice there, right? Uh, right, protect your account always. Oh, Andrea, you
Oh,
on
can
mute? Uh-huh.
can you still see my screen?
Yeah. Mhm.
Okay, all right. You can see SPX right now?
Yes, SPX weekly.
Yes. Okay. So, Bollinger Bands. Another favorite way to apply Bollinger Bands is on indexes. So, SPY, QQQ, those are great places to use Bollinger Bands because the movement is a lot more, I guess, incongruent with the market. So the market doesn't really have super sudden moves or like bad news that can affect an individual stock. If you have an individual stock, you're kind of at mercy to whatever happens to um that stock. For example, Netflix. If you're trading Bollingers. Let's just see here. Like maybe this might have been a place where you decided, hey, I'll take some Netflix, but with some news around the corner, or let's see this one, a split and some news around the corner, this can go against your trade. So this kind of movement won't happen as often on the indexes. So indexes is a good place to keep an eye on Bollinger Bands. So weekly Bollinger Bands are super powerful. And so as we can see here, it kind of crosses below the bottom band. So I'm on the weekly time frame and I have kind of the default Bollinger settings here. So the way I added Bollingers was right here. Bollinger, you have bars, bands. It's not those ones, it's this one right here. And so it kind of color coordinated where blue is your longs, orange is your puts or shorts, and then the middle being the median of the Bollinger Band kind of it's like the 21-day moving average. It's like the mid. So if you're trading around this zone, so this is, you should start looking at it. Hey, this is an alert that this can be a signal to go long. So a safe trade would be from here to this midpoint. So let me take out that 50-day moving average 1 second. Let me take out the 50 and the 200. So I like to I'll just keep the 200. I like to keep the 200 because this lets me know that, hey, there's nothing seriously wrong with this current stock that I'm looking at because it's trading above the 200. If it's below the 200, then something's up with it. But yeah, we're trading above the 200. This is an extreme. A trade from here to here is a safe trade. You can safely say that when price moves into an extreme area or level, that it should snap back like a rubber band to the mid. And so if you get this additional move here, that's just bonus. So if this is two contracts, this is exit point for contract one. This is probably the exit point for contract two, especially when you see it starting to flatten out. So if you enter here, your stop loss is probably going to be around here. If you enter here, but you end up over here, then there's a chance that your trade doesn't work. So you should probably cut it.
That
But the
is that is if you're using just Bollinger Bands alone as a trading entry,
correct.
I mean, if you're using other things like the squeeze and things like that, you might say, oh, you know what, the squeeze is going up, I'm going to stay with it, right? And another thing that you guys should notice about the Bollinger Bands is also the angle at which they are, going. So you can see, right, like during certain periods when they drop like a rock or they rise up like a meteor, right? The Bollinger Bands are temporarily going apart, like the upper and the lower are going away from each other, but eventually they catch up and they go parallel to each other, right? So you can see in the uptrend, right, the Bollinger Bands are pointing upwards as well, and along with the price action, right? And you can use that in conjunction with moving averages and the ADX to say, hey, you know what, we are in an uptrend now. Okay, so anytime I pull back to the averages, right, or maybe even a little lower than the averages, sometimes maybe even the bottom Bollinger, right? But those Bollingers are still kind of, showing upward, and the ADX is saying, you're still in that upward direction. You might buy, like maybe like one or two contracts, and then take it up to the upper Bollinger and get out, right? That is if you're interested in such, quick short-term trades, right? Um,
Can,
I
uh,
mean, mhm.
And Anand, can you give an example of using Bollinger
Mhm.
Bands in a positive ADX, like kind of what
Yes,
we had from July to October? So
yes,
during
yes.
this time, I got many text messages from traders that, hey, I tripled my account, I doubled my
Mhm.
account, I quadrupled my account, and this happened during this period, this green period.
Yeah, see,
So
you have a strong ADX. You have the Bollingers showing an upward angle. You have the 8 above the 21, EMA, right? So this is the situation where you say, all right, you know, um, let's go, let's start buying, right? Because anytime it dips, right, this is where you buy the dip,
yeah, this is a by the dip
right?
environment. When you see
Yes,
this,
right? And of course, keep those stop losses, right? If you go below, where you bought it, an appreciable amount or whatever, right? Get out,
Yeah.
right? Protection of the account is more important than making profits.
Yeah, in this current situation with the positive ADX, as you can see, we rarely tapped the bottom Bollinger, and we didn't
Right.
really try trade outside of it. So the rubber band was so tight on the upside that you had to use the midline as your entry point. So this was your buy the dip kind of situation.
Mhm.
So these here identify entries here. That's one entry, looks like two, three,
And also remember,
four.
right, if it does go down to that bottom Bollinger, right, but your eight is still above the 21, right, that means, the situation is not matching. So when I say matching, what I want to see is, okay, ADX is red, 8 is below the 21 to the downside, and the Bollingers are also kind of trending, turning around and trending to the downside, which you see at the end, right? Like at the end, latter, I guess the latest data there, right? Um, so, in those situations, pretty simple, right? Easy to know, what to do. But if you get kind of like a 2 out of 3 pass, like let's say, okay, the 8 is above the 21, the Bollingers are up, right? But you get like that brief red ADX because the thing, shot down to the bottom Bollinger, right? You could still say that's a buy point, right? Depending on your risk tolerance, right? And then you basically set a stop loss below that candle, right? Below that red candle at that Bollinger, and then say, all right, if it goes up, I keep it. If it goes below that, I sell off and wait for the next situation to happen, right? So that's for that upside move right there, right? And Henry is now marking, the sell the rip situation, right, where you actually have a clear downside move. You see the 8 below the 21, Bollinger Bands angling downward, ADX is red. So yeah, here we have, anytime you get up to that 8 or that 21, right? Again, set that stop loss, right? And here's the other thing. If the weekly chart turns yellow in this time, right, completely get out of any puts you have, if any, right? And I'm saying this from past experience. I've seen that, happen where, the weekly squeeze starts to turn yellow and then everything just V bounces,
Yeah, that's a good point.
right?
Like looking back to around May, we did have a
Right.
we did have a red ADX. Let me see. Let me mark that time frame. Let's see. March March 2025. Is that it must be tariffs. Uh yeah, tariff time. Tariff time ADX was red here during this time, March through May. And then we'll look at it on the weekly, March through May, this huge dip right here. March to May, and then yellow histogram. That's the time when things started to shape up. And then on the weekly, you can see the 8 crossing the 21. So that means that's the 8 week crossing the 21 week, super bullish. And then that took us into this green ADX period here, which
Hey
was
Henry,
from,
quick question. Are we sharing the slides with the group after this?
yeah, we'll have the
Mhm.
recording and we'll post it on our YouTube.
And what about the slides? Do you want to send copies of the slides to people?
Yeah, if you
Okay.
guys want a copy of the slides after, DM me on Facebook,
Uh-huh.
and then I can share you the slides for today's class. But yeah, I'm one of the two admins. It's me and Anand. So
Mhm.
look us up on the member group contacts, and then you can see us there. And you'll see one of our posts like in the main chat probably at least like once or twice a day. You can find me under Henry Joseph. Just send me a DM and then I'll share it with you guys. It's a Google Slides, so it's shareable. I can make it public. And then so yeah, the 8 crossing the 21 is a buy the dip situation. Oh yeah. And then as you were talking, Anon, that made me think of the 8 and the 21 by itself, which it's in itself, it's pretty powerful. So if you don't like a lot of things on the screen, this can kind of help you understand what's happening in the market with a whole lot less fluff. And it's probably a good place for beginners to start. If you were to just look at 8 crossing 21. So let me look for a clean screen. I guess this one's pretty plain. So what 8 crossing 21 is, it's two different moving averages. And so one is a low speed EMA, exponential moving average, crossing a slower speed. So 21 is pretty much your average monthly price action movement. So it kind of marked two times where it was a good time to start going bearish. This time here, this crossover, this was a bearish crossover to the downside. And then when things started to clean itself up, this was your bullish crossover here.
Mhm.
And then that got us on this uptrend here. Hang on one second. Let me mark
Now,
that.
now some of those bearish crossovers don't last long,
It can be short.
right? It can be short. So watch the ADX as well on that one, right? If they match, then sell the rip, but keep that stop loss very tight,
Bullish crossover until about here. And then our last 8
right?
to 21. Yeah, yeah.
Now, the other thing to note, right, during this last upper crossover, we also saw the ADX, being orange, right? In which case you can just, do a reversion to the mean trade.
Yeah. Yeah, we'll show an example of that in the Darvis box section. What we're talking about during that chop zone. So yeah, you identified a bullish period, a short bearish period here, follow with another bullish, and then now which our current situation, which is bearish. So that could be another thing that you guys look at as we come into the next couple of weeks, going in from April to May, depending on how the news pans out. If you see your 8 crossing the 21 on your screen, and then that's to add those is pretty much here. So it's exponential, moving average exponential. That's this indicator here. One, two. And then so when you add those there in your trading view, you'll get two of these here. So let me take out my old ones so I can add them fresh. Oh, that was 9. 8 EMA. 1 second. All right. Just delete them from here. Where are they? 1 second. 8,
Hmm.
21. And then I have this one here. Let me hide that one real quick. Visibility. Oh, I can't hide it from here. Where is it? Okay, so change your inputs. We're gonna do 8 on one. I like to use yellow. So we got that. And then for the second one, change that to 21. And for that one, I like to use blue. And the thickness, I like to make it a little bit thicker because it's my favorite moving average. So we're currently, so that's how you set up the EMAs on your screen. And we're currently approaching the 21 EMA.
Hmm.
So this is kind of a decision point. We either break above the 21, which is it's going to take a lot. It's going to take a lot of good news for us to start trading above the 21 on an index like the SPY. If we can start trading in this zone, then you can sell me as being bullish. I'll be pretty bullish if I start seeing that happen.
And if the weekly squeeze also turns yellow at that point, right, probably
Combined with that,
will be looking to, just start buying again,
this will make me start shopping, and so
right?
I'll start looking at the things that I want. I like Microsoft.
Hmm.
That's on the cheap right now. And let me see. Let me look at 200.
Right. Again, provided that the market is also
It's
cooperating here, right?
cooperating. Yeah.
Yeah.
Yeah, see this here, the 50 crossing the 200 on the downside. This is death cross. This is no good. So
Yes.
we need to see this kind of shape up.
So,
We
in
need the
those
market.
situations, we don't want to, catch a what you call catch a falling knife or catch a falling dagger. This is not what you want to do, right? Now, I know certain systems tell you, keep averaging down, right? Like the AIM and systems of that nature, right? Or if you go to the Motley Fool, right, they'll keep telling you to average down. Right now, averaging down, on a down market and a down stock is a recipe for, kind of blowing up an account, just to let you know,
Yeah.
right? It is better to actually wait for it to turn around before especially with, high performers like Microsoft and stuff like that, right? You can generally wait for it to turn around and buy that, right? Um, any other stock, of course, be more cautious, right? Maybe look for a base to form and then buy on a breakout for those,
Yeah.
right? And we'll talk a little bit about base formations, um, using the weekly chart, right? A tight kind of price action on the weekly chart, right? Which means the squeeze is turned on the weekly chart, right? So you see that sideways price action, right? And what you're looking for there, right? And actually, if you look at the situation with oil, right? Oil had been going sideways for quite a while, up until Trump essentially declared war on Iran, right? And in this situation, you want to use the weekly, right? Not the daily. I mean, daily you can use for entry, right? But you want to see the weekly first to see if it's squeezing, right? And you can see that yes, it was squeezing, right? And then what you want to do is look for a pretty strong, breakout, right? And look at the news and see what's causing it to break out, and then buy if if you think that news is going to continue pushing it up,
Yeah. Yeah, that's
right? And you also want to look at volume, right? Because usually before a breakout, right, there is lower kind of lowering volume before a big you know smash up, right? I don't know if that's the case for oil or not, but for like investors business daily stocks, right? um, Before a breakout from a base, right? You see reducing volume, and then bang.
yeah.
So
Yeah, when you
there you
when you
go.
mentioned oil on, the first one that I thought of was UCO.
Mm-hmm.
So some of you guys might be wondering what UCO is. So UCO is a leveraged exchanged ETF, and it delivers twice the daily performance of this commodity. So your 1 point move equals 2 points. So
So look
it's
at
double.
the volume here then too, right? You want to look at the volume, right, on the weekly, right? So put down, you want to put that down as well.
So here we have volume.
Yep. Right. So I mean, look at it. It's usually below average there most of the
Yeah.
time. So this
I mean,
one
look.
doesn't tell. I mean, I think it only started increasing a little bit there and then kind of broke out at the end.
So yeah, so this was your
Mhm.
accumulation phase or sideways phase.
Yep.
So during this phase, the only trades that you can kind of take out of here is from the support line to the resistance, or from support to the midpoint. That can be
Hmm.
also resistance, or you can take trades to the downside to the mid or downside to the bottom. But your safest bet would be the mid. So after this period of chop, kind of bulls fighting
Right.
bears
And you can see
plan.
that the squeeze was on a lot of the time in the on the weekly chart, right? So yeah, occasionally you saw it turn off, but then it hit that resistance and came back down, right? So you could either buy on the upward squeeze, right, from the support, right, or wait for the breakout above that resistance and then buy that, right? But that may be less of a guarantee, right? Because at any time news turns around, it goes back down, right? So you'd have to be pretty quick at pulling the trigger there.
Yeah, this would be considered a buy zone here
Mhm.
if you had high conviction on.
If you had high
Well,
conviction and you saw that the news was telling you that okay, this war is going to go on for a long time, so you know oil supply will be lower, right? And therefore the prices will be higher. Okay, there you go, right? Buy that, situation as well.
All right, Anand, let's start
Right.
talking about Darvis boxes. Do you want to do them on
Yes.
indexes or do you want to do money on any stocks or
Um, I think we start with the indexes and then go to the stocks, right? Always do this, right? Always go for the indexes first, see what's going on there. Then determine, what to do with the stocks.
take some of these off? I'm going to get a clean chart so we can see the Darvis boxes.
Mhm.
Nice. Okay.
So Darvis boxes were actually created by an investor named Nicholas Darvis, right, who was actually investing back in the 50s. And he made $2 million, right, doing this, right? And back then, right, that was actually worth quite a lot of money. Um, Now, Nicholas Darvis was a dancer, right? He was not actually a professional investor. He had nothing to do with the stock market as a broker or anything like that, right? And so he was like, okay, I'm only going to have like a limited time as a dancer, right? My career as a dancer is going to be limited over a certain period of time. So whatever money I get, I'm going to have to increase somehow, right? And of course, the first thing he thought of was the stock market, right? Now, initially, right, he was actually failing, right, because he was buying, mainly based on fundamental analysis, right, and the stock price, and he quickly found out that the stock price and the fundamental nature of the company did not always, did not match a lot of the time. So initially, he was losing money, right, but then he decided to just read the charts instead of buying based on the fundamental, like how much revenue is the company making and things like that, and how much profit, so forth, right? And then this is where he came up with with that box, that Darvis box, right? And he said, as long as the prices are operating within that box, I don't care. So I want to see if it breaks down or if it breaks up, right? And that's where he started to care. And actually, he did pretty well with this, right? Just make sure you have a strict stop loss.
What's the minimum of points, Anand, to draw the Darvis box for
Well,
either
if you're
the
doing it
top or
on
the
the
bottom?
daily chart, right, I would say at least 1 to 2 weeks, right?
Okay.
5 days to maybe 7, maybe 10 days max,
Oh, okay.
right?
Is it safe to draw your Darvis on the weekly and then take them over to the daily?
You could do that, right? But I like them on the daily because of the ups and downs,
Okay.
right? There is a lot of these ups and downs. The market has a memory, right? We don't always have that same memory, right? But something where which bounced off a long time back, right, can be a bounce off point, now, right?
That's when
So
your that's when your trend lines come in. You're really
right.
long
I mean, if you
term.
if you if you look at the tariffs, right, and the trend lines can also turn into Darvis boxes, right? If you look at the tariffs, you could see that bounce off point, right? That was a bounce off a long time back,
Oh, okay. So
right?
this is
Yeah.
tariffs, this dip right here, and it looks
Yep.
like it's an
See?
old support. Yeah.
Yep. That's why I'm saying, right? Like if you do it on the daily, right, you'll have a much better, you know, I guess idea of what's going on,
I forgot, was
right?
it in TradingView you find an automatic Darvis box or was
No,
it
it was
Yahoo?
on Yahoo Finance. Actually,
Oh,
on
okay.
drawing the Darvis box tends to be better.
Drawing it yourself. Yeah. If you
Yes.
draw it yourself, then it makes you identify
Hmm.
your support and resistance
Yep.
manually, so you have it in muscle memory in a way.
Yes. Right. And you can figure out, hey, that was a point where we bounced off before, right? A long time ago. So you say, okay, we bounced off here. We are coming back to that same point. Now I'm going to start looking at the 8 crossing the 21, the squeeze, turning around and things like that, right? And of course the candles and the price action matching that.
This one's interesting here. Let me try to fix this Darvis box. All right. That probably looks more accurate than this range and then this range. Um, yeah, this one's hard to draw because of the price action is crazy. Or maybe actually we'll do it this way.
Oh,
That
Henry,
was
let's show them how to. So, guys, on the left hand side,
yeah,
right,
this is better.
of the trading view, you can see there is a box, yeah, right there where Henry is pointing, right, and click on rectangle, right, and then you can draw using the rectangle. Right, as far as how to know, to draw it, right, like when to draw it and things like that, what you're looking for is long-term sideways price action, right? So first thing you would do is draw your support and resistance. Look at all the points where you went, you went up and then you turned around, or you went down and you turned around, right? Those would be points where you draw lines, right? And then if they actually have a channel, that's where you would draw a downward box.
Let's see. All right, so I'm just gonna draw lines on the main points. Um for me, my preference, I like less lines. The more lines it's a little harder for me to see what's going on, but I just kind of broke up the market into these sections here. So yeah, we're approaching a pretty strong, which could be considered a brick wall. We've tapped this one, two, three, four, five times on this one. So if we can break this channel, then that can look good for us. All right. So let me try doing one on Intel for you guys. Let's see. Okay, this one moves kind of crazy too. All right, let's see. All right, let me go back. Let me just start with the current. All right, let me do weekly. See if I can get a smoother. That one's crazy too. All right, let me go daily. This one moves around a lot, so here I'll try. All right, current Darvis. Let's say right about here, and then before that, I guess here, and then this was a good, nice sideways channel. Yes, right about here. And then also, Anand, for when the Darvis box is invalid, when would
Yes.
you when you have
As
a
soon
rule?
as it's invalid, you stop. You stop
So wait,
extending it.
so is right here? This is an example of an
Mhm.
invalidation of this current Darvis box. Once
Yes. Once it breaks down, it's invalid, right?
yeah, and let's see here. Let me try this one. That looks like another box. And we'll do this one as a nice sideways one. So
Yep.
this Darvis Fox got invalidated by this move here.
Yep.
So that made it a new box. This one here got
Actually, you could
invalidated by
extend
this.
it a little bit, to cover that top as well, and the bottoms,
So
right?
eliminate this, and then do this one this way.
No, no. Well, that's one way. Yeah, that's
Yeah.
one way you could do it too, right? So it could work that way. But no, I was just saying, make sure you cover everything, right? Like, yeah, like that, basically.
Okay.
Yep.
And then this
Right.
box
And for
got
the
invalidated. Got
leftmost
this.
one as well, right? Like make sure you cover that,
All right.
right? Because yes, if it goes outside, remember it's invalidated. So make sure you cover all the supports and resistances.
Let's see. That
Yeah.
is how many touches here? Let me look for this touch. This one here.
Hmm.
One, two, three touches.
Yep.
And then you had this small range. Okay.
Yep.
All right. So that's how Intel looks on the Darvis. And
So
then
if you look at it, and it's trending upward, right? You can use the Dorvis box support as an entry point.
So then that would mean
Mhm.
here, I'll make that green. And then this one, I'll make this red. Just for this current box right here.
Exactly. Yep.
So this is your support and resistance for this time frame until now, until proven otherwise. Okay.
Yes. And if the box is formed, from high to low, I use one color. And when the box is actually formed from a low to high move, I use a different color. Right. For me, high to low is yellow colored, and low to high is purple colored. But you can use whatever scheme you like.
Um, hey Anand, can you show your automated Darvis box on Yahoo Finance?
Oh, yeah, yeah. Yahoo Finance. Okay, hold on. Let me share my screen first, right? Like that. Okay. And let me open Yahoo Finance right here. Here we go. So all you do here is you go to the indicators right here, right?
Oh, hang on.
And
Do you want me
yeah,
to stop share?
and you don't have to actually. I can.
Okay.
I mean, right? Because we can multiple people can share, right?
Oh, okay.
But yeah, if you guys see it, right, you can just search for Darvis, and this Darvis comes up. You can, uh, and then you can just click on it, and it will show up, right? Now, as far as settings go, I think we just use the default, right? Whatever the default settings are. But yeah, on Yahoo Finance, all you need to do is go to indicators, search for Darvis, and there it is, right? But a lot of the times, right, it does the Darvis boxes pretty, fairly well, but certainly not as well as we could draw it ourselves. So there's that too, right? In this situation, I would say nothing beats the human eye. Uh, so go right. Right back to you, Henry.
Okay.
Right. So I just showed the. Yep.
Okay. Yeah, were you guys able to see it? I wasn't able to see it for some reason. Um,
Oh. Yeah, but it's
I
just you go to indicators right on the upper right corner. Um,
oh,
and
okay.
yeah,
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 you're able
you
to see
just
it. Okay,
yeah,
good.
yeah. So that's what you do.
Okay. All right. So, let's do one. This is I've been kind of drawing this one over and over, but it's my favorite. So I'll draw Darvis boxes with color coordination to the ADX, kind of like what we've been showing before. So yes.
That'll also work, right? Because then you know that hey, if it goes to the support of that box and ADX is green, that's great.
So then, this one, they're not quite exactly Darvis boxes. They're just kind of ADX reminders for me. So, let me change this to red. So current environment is sell the rip. So that tells me that longs are going to be going against me. So shorts are going to be like the path of least resistance. I like the 8 EMA. So for
ATMA,
here,
especially if that ADX is really strong,
it's
right? Like
past
if
40.
it's above, if it's past, a 30 or past 35, right? It's time to, just, as soon as it hits the eight, buy the puts,
So we're
right? And stop loss. Always remember stop loss.
let me just catch
Right?
most of it.
Actually, get down to the low minimum as well, right there.
Let me get
Right? Because
down.
that's where the orange happens too, right? So all the way down, right? Yeah, yeah. Further down, right? You're taking up to the minimum, right? Up to the bottom. Yeah, more. All
Way, okay.
yeah, exactly. now now you see it, right? So um, now what is happening here is, it in the beginning, right? It was a little more volatile, then the price action tightened a little more, right? But in either of these situations, right? Yeah, use the Bollingers. Now, since this is a talk on Bollingers, right? You can use the Bollingers, the proximity to the Bollingers, right, to determine whether you're going to buy calls or puts. So if the ADX is lower than 20, right, you can see, oh, it's the upper Bollinger, right? Okay, now I'm going to buy puts and I'm going to let it hit that 20, right, and then get out, right? When it goes to the bottom Bollinger, right, and its ADX is lower than 20, right, I'm going to buy the call and then let it hit that 20 and get out, right? I'm not necessarily going to take it all the way to the upper Bollinger or to the top of that box,
Yeah.
right? And
So
this is even before we draw the box, because in the beginning we might not know that there is a box,
yeah.
right? But but we see the ADX is lower than 20, right? And it's above the Bollinger, right? All right, I'm buying, right? And then when it hits that bottom Bollinger, right, I'll buy maybe like a week out, or 2 weeks out on the call, then let it hit that average and get the heck out, right? And then once the box is drawn, right, we can use also the top and the bottoms of the box to determine entries and exits, right, as well as the Bollingers. Right now, if you can get both the support of a Darvish box and and below bottom Bollinger, oh, that's great, right? You can just take that and let it run a little bit, right? But yeah, that's reversion to the mean trading, right? And you can use the RSI as well, right? If you're not as confident, you can say, hey, is the RSI also oversold or overbought, as the case may be,
Yeah.
right?
So what are non mentioned here? Oh yeah, for ADX, it's this indicator type ADX, and it's going to be this one here,
Yep,
ADX DI positive, DI negative, GU5. That's the
yep,
one that gives us this nice graphical version of the ADX. The
yes,
classic ADX that you guys might all be familiar with is something
that one, yep.
that more looks like this. And
I
so
mean, you can still see red above green means negative, green above red means positive, right?
it,
And yep.
yes, yeah, for years we used this. This is
Hmm.
the like basic one version of it. When we found this, then this was a lot easier to
This
use.
was much more visually, you can actually see it almost right away,
And so color coordinating with boxes,
right?
this is just to set a reminder that hey, when I see orange, then I know that we're in
Hmm.
the reversion to the mean. So the trades have a higher probability of snapping back to the middle when reaching extreme points. And so the Bollinger is a really good tool to identify outside the normal movements when the rubber band would technically have a higher chance of snapping. So this doesn't mean load the boat every time you see something out of the Bollinger. This means that you can take a, let's see, one trade here, one, one, one. This is another one. So depending on how you've been doing for the week, you might do two trades, three, four entries on these. But when it's orange, it's safe to say that we're going to snap to the middle. So so yeah, so orange is not such a bad thing, but say if you were in this buy the dip situation, you would have never got out of this kind of boxed area. So if you had calls that were outside the strike, if you went way out of the money, you would have got killed on time. So longs didn't really work in here either, unless they were really close to the money and you got out of them as soon as you seen profit. Yeah, longs worked a lot better in this environment here. Let's see, where did my squares go? Yeah, longs worked a lot better here. You could have went out the money and it would have been just fine. And then if you gave yourself time, that just added to the success rate. But yeah, I guess that kind of wraps it up for Darvis.
Yep.
Um, we have a 3-day class coming up in April. It's April, I think it's 18th, 19th, 20th. Wait, no, wait. Sorry, 18th, 19th, and the follow-up class on the 22nd.
Yes.
It's a 3-day live. It's a swing trading accelerator with recordings, with the Discord, with everything that you guys just seen here. That's just probably like one, I would say what, like 1/20th of what you'll learn, or maybe 1/15th. It's a small fraction of the whole system.
Yep.
We also are taking clarity calls for the month. I think we have about four left. We usually take only around eight a month. So we have around four left if you guys want to do a clarity call. And then so those you can book on our homepage. And that's option trading for beginners.com. Not options, it's option, no S. That takes you to someone else's page, and it's loading slow. But yeah, this is our homepage. Is where you can find all of our systems. We have the quick start. The quick start is um, just our quick start guide, but it's not as small as you guys might think. It's actually 131 pages with an audiobook. So with the clarity and the swing trading, you get the quick start free. So that's included. So that's something there. If you guys want to check it out, you can check out our website. But yeah, if you guys want a copy of the slides, send me a DM on Facebook, and then we'll be uploading this on the YouTube. So if you want the YouTube link, DM me as well. And so we'll get those processed probably by tomorrow. We can share that with you. But yeah, to this meeting's a little short. It's Easter, so we want to just relax, and then we'll see what happens at market open tomorrow. Let's hope that we get some good news.
Yep.
Yeah. All right. Well, good night, everyone.
Uh, oh, Henry, could you just stay one moment?
Yeah,
And
sure.
okay, is Corey still there, or see what's left? Oh, forgot to ask him because what I wanted to ask was hold on, let me stop the recording.